Ladies and gentlemen, welcome back to the channel. Something big is coming for Tesla. Tesla kind of just alluded to something is coming on their X account via their Tesla AI profile. We'll discuss that here in this video. I want to look at the option activity today as well, because putting the two together, there was definitely some weird activity on the options chain. And big money, they know about events before they happen. So if something is coming for Tesla, if there's some kind of announcement coming, it wouldn't surprise me, or it doesn't surprise me, I should say, to see elevated option activity to the call side today. Specifically, for this Friday's expiration, there was some weird things that happened around that $300 call. But besides that, we will take a look at this clip from CNBC's Mike Wilson. He says a weaker dollar is an underappreciated tailwind for stocks. We will also discuss your biggest headlines coming out here in after hours and heading into tomorrow that you need to know about, including Brazil being charged a 50% tariff. And last but not least, we will take a look at the economic calendar and any and all economic data coming out tomorrow morning. Also have a couple of earnings as well tomorrow. Ladies and gentlemen, hit that like button and subscribe to the channel if you have not done so already. I hope you guys are ready for a jam-packed video. And let's get started. So first and foremost, Jeff Lutz on X shares this post from Tesla AI 1 hour ago, where they just randomly post on X, the spice must flow. Okay, the spice must flow. I don't know what the hell that means, but everyone is assuming this means some kind of news is coming soon for robotaxi, for FSD, obviously something related to Tesla's AI. This X account that was established in May of 2023 only has 121 different posts. They don't post that often. The last time they posted was June 30th. It says a functional simulator for Tesla Dojo. June 28th, big-brained bots, world's first autonomous delivery of a car. I mean, they don't post that often. To get a random post an hour ago, the spice must flow, that's telling us that something is coming. Whether that is going to be impactful for the stock or not, well, that's a different conversation. But perhaps it could be. Obviously, at this point, we are waiting for clarity on scalability for the robotaxi. So any new cities or, guidance for what scalability could look like would be fantastic news. Now, I'm expecting that news will come on Tesla's earnings on July 23rd. It could come before then. It wouldn't surprise me if Elon shared something on X about guidance for robotaxi. Okay, whether that is when people can turn their cars with FSD into robotaxis, or a new city that Tesla is launching into, something along those lines could be part of, this post on X. Now, whenever I see something that's weird, that makes the Tesla community kind of speculate whether or not there is more news coming or something substantial, I always check Tesla's option activity for, 1 to 2 weeks out. Okay, I want to see if there's something unusual, and sure as shit, there is. So for today, there was a ton of option activity at that $300 call. Now, Tesla was flirting with $300 per share for a good chunk of the day today, but it's about 5 times higher than the $300 put. Okay, substantial. Okay, so almost 96,000 for volume at the $300 call, only 22,000 for volume at the $300 put. Now, These options are almost $300 a piece. A lot of this is probably hedge funds and institutions. Like retail investors, can they afford $300 for options? Of course, right? I'm not going to say it's all hedge funds and institutions, but there's definitely a good chunk of big money that was trading around that $300 call today. But when you look out further, it gets equally as dramatic. 22,000 for volume at the 302.50 call. Like, who in the hell even buys, those 50-cent strikes? Most people don't. 44,560 for volume at the 305 call, 15,000 for volume at the 307.50 call, almost 33,000 for volume at the 310 call, 9,000 for volume at the 312.50 call, 18,000 for volume at the 315, the 320 had 22,000, and the 330 call at 8,000. The 325 call actually had 10,000 as well. So there was a lot of option activity today for the call side. Versus the put side, there was virtually nothing. Besides the 297.50 put having 30,000 and the 300 put having 22,000, none of these other strikes even go above 5,000. And there's only two, the 302.50 put and the 305 put, that were in the 4,000s, right? There was not a lot of that put activity relative to call activity. It definitely looks like the calls were outpacing, which, again, not always, but sometimes the option activity can tell you kind of the underlying story of what's really about to happen, because options are always forward-looking positioning. Now, in overall option activity today, when you include all expirations on the options chain, you had 120 different trades from hedge funds and institutions, totaling $205.61 million with a positive order value of 56%. So kind of neutral overall, slightly tilted towards the positive side. Now, what we've seen today as far as short sellers, that's also notable. You had 975,520 shares that were covered on today. So there was quite a bit of shorts covering, almost 1 million shares, which is kind of substantial. I mean, in a dollar amount, let's just use 1 million shares for simple. Let's do the exact calculation, because why not? 975,000 times $296.42, roughly where the stock is at right now. That's $289, almost $290 million worth of short positions that were covered today. That's not a small amount of money, to say the least. And honestly, we've seen this trend for a while now. Back in early June, you had 85 million shares that were sold short. Now you're sitting at about 76 million shares sold short. So you've had about 9 million shares cover. If you want to include the million shares today, you're potentially looking at like 10 million shares that have covered on their short positions in Tesla in the last month, in which honestly the stock is actually like down in the last month. So that's kind of impressive. Now, here's another example from unusual whales of just hedge funds and institutions. They know things far in advance before they actually happen. Insider trading is the new norm, okay? Even today in after hours, Ferrero is buying out Kellogg for $3 billion. The trading volume on Kellogg was 18.9x normal volume on July 1st. This is a very illiquid options chain. Nobody buys, options on Kellogg, right? But all of a sudden, the last 3 trading days, they were in big numbers. Fishy, I would say. So it would not surprise me at all if something big happens soon for Tesla. Again, Tesla's AI account does not post much on X. And again, shareholders are waiting for clarity around Tesla's AI endeavors, around robotaxi, clarity on Optimus. There was reports a couple of days ago, maybe a week or two ago now, that Optimus production was being halted, in which we know that's not true, but what's really going on? Like, there's a lot of questions right now we don't have answers to. And I know retail investors, like, we get it. Robotaxi is going to be huge. Optimus is going to be huge. We're bullish. We understand the stock better than we understand our wives for the most part, okay? I'm not married, so maybe I can't say that. Point proven, okay? Hedge funds and institutions are very much not that bullish in Tesla. A lot of them are underweight Tesla, either short Tesla, underweight, or not invested at all. They don't have the same level of conviction as retail investors. So what happens when you get, let's say theoretically, Elon Musk comes out and says, yep, we're going to have 20,000 robotaxis out on the road next year. Here's the plan, and here's how we're going to do it. We're going to turn on robotaxi in certain cities for customers, vehicles that purchased FSD already. I don't know exactly what he's going to say, but once you start to get, some clarity and some guidance, then even the bearish investors have to start saying, hey, maybe we are not hearing this one out. Maybe we're just bearish on Tesla for no reason. Maybe Tesla's actually doing something here that will be big over the coming years. And then, Wall Street will have to start modeling in what robotaxi and what AI will look like for Tesla next year, year after that, 2030, 2040, so on and so forth. You get the idea. But we don't have that clarity. We don't have that guidance. Any good news at this point, I think, is going to be seen as really good news. Following Elon's political tantrums, endeavors, I don't really know what to call it at this point. Again, following just overall not the greatest sentiment around the stock. I think any good news at this point could be a powder keg for Tesla to the upside. But then again, we still have the political backdrop hanging over the stock. And there's a lot more, I guess, if you will, growing speculation that the reason Elon is doing these political things and not really caring about Tesla, Tesla's share price at least, is because he doesn't have a compensation package. But when he does get a compensation package, it's going to change, right? Because Elon's going to be motivated to want to get like 25% voting power so he can control Tesla, right? There's zero motivation for Elon to act accordingly for shareholder interest. And he's not, right? So, yeah, there's growing speculation that a compensation package could be coming soon for Elon, potentially as soon as this upcoming earnings. It wouldn't surprise me at all, considering there was a special committee put together back in April. I mean, how long does it really take to get a new compensation package? Shouldn't take that long. But before we go any further, ladies and gentlemen, if you guys have not joined us yet in the trading community, I highly recommend that you do so. Now, only do so if you are someone looking for big returns. We are not interested in investing in the SPY and getting a 10% return. There is no service or no value provided in that. You can do that yourselves. What we do is comb through small cap AI names, small cap biopharma names, really small cap anything. I think those two sectors have the most opportunity right now. The gene editing sector is just on fire every single day. I think CRISPR and some of the other ones we invest in are up over 10% today. Something weird is going on with gene editing. I will just say that. But we're going through these stocks. We're finding the good ones that are underlooked and underappreciated. Really, small caps have been underlooked and underappreciated since 2021. Really, like for a very long time. As interest rates have been higher, and we had our own set of issues in 2022 as well, even in the second half of 2021 with inflation ramping up. That's where I think the opportunity is the most on a risk-reward basis. And the stocks that we are finding are already killing it. That trading community portfolio already up 70% this year. Okay, actually, I lied. It was up 70% earlier at one point in after hours. It is up 66% this year, and I think it's going to be up well over 100% for the rest of the year. The goal here is to grow this portfolio to $1 million, adding 1,000 or 2,000 a month, something like that, over the next 2 years until 2027. To grow that into $1 million. That's the idea, and I think those big opportunities, the way to really get rich with the wave of AI that is happening, that I think will continue to happen, is in those smaller cap names, ones that are undiscovered at this current moment. That is what we are doing. That is the service that is provided. Obviously, I'm not a financial advisor, not a financial planner. Come to your own conclusions, blah, blah, blah. But come check it out if you have not done so already. Now back to the video. Now, Donald Trump today, after the closing bell, announces a 50% tariff on Brazil. Says, I'm directing USTR, United States Trade Representative, to investigate Brazil's continued attacks on U.S. companies' digital trade. Brussels is discussing car import quotas, export credits with the U.S. in EU-U.S. trade talks. And in a new Trump letter, there is a 30% tariff on Sri Lanka. Now, as I have said before here on this channel, none of these smaller countries matter. I will reiterate yet again, China matters most. We've seen if you put a trade embargo on China, if you didn't know, S&P is going to fall more than 20%. That's what happened. That's the situation we were in. That's cleared up now. It actually sounds like Trump is getting along quite well with China. And there's a preliminary deal seemingly done, but not signed yet. It's considered done from Wall Street's perspective. If something were to come up where the deal was thrown into question, that would be a problem for markets. But 50% on Brazil, put 50% on the rest of the world besides China, Europe, Canada, and Mexico, and who gives a crap? None of it matters. And that's why stocks do not matter either. You're going up in after hours. You went up today. None of these other smaller countries matter at all. I mean, they do, but they don't. Hopefully that makes sense. Like, it's not gonna really impact S&P earnings based on a 30% Sri Lanka tax or a 50% Brazil tax. Even though I think that Brazil one will get negotiated lower. Now, in the Fed minutes today, most June meeting participants saw rate cuts later this year as appropriate. A couple open to July, if data supports it. Others see no cuts in 2025 due to sticky inflation, strong economy. The staff raised GDP outlook and lowered inflation forecast. So the Fed minutes typically do not matter to markets. Seem like they mattered a little bit more today, if you will. Around the FOMC minutes, you did start to kind of trend higher into the end of the day. But typically the FOMC minutes don't do anything because it's not really giving you new information. And that's kind of the same story as today. Like, the odds of a July 30th rate cut went from 4.3% earlier today to 5.3% based on the FOMC minutes. It moved up 1%, which is pretty much nothing. Last week, in fact, it was at 26.7%. So you've actually fallen a lot in terms of markets pricing in the potential for a July 30th cut. Now, we will have some earnings tomorrow morning, including Delta and Conagra. Conagra, big food company. Obviously, Delta is important for travel. Thursday and after hours, Levi's. I think that one's going to be important because of tariffs. Conagra to a certain extent as well. WD-40, PriceSmart, E2 Open, and Vista will also report tomorrow in after hours. The following week is when we'll start to get, more of the banks coming out. And, banks, we're gonna get good earnings from the banks. It's gonna be surprising if we get bad earnings. It's really gonna be, I think, a strong earnings season overall. I really don't think we have much to worry about because, Wall Street is not that optimistic about this earnings season. We expect it's gonna be okay, But if it's good or great, then that's, further upside potential in my view. Now, for tomorrow, we are going to get initial jobless claims. We're expecting about 235,000. Last week it was 233,000. These are very elevated numbers still, okay? So we want this number to come in low. The lower, the better. Like if you got 150,000 or something, that would be great. But the number's been pretty consistently in the mid 200,000 level. Like 240, 250,000 hasn't been too uncommon. That's really high, right? That's the amount of people that are initially filing for unemployment insurance every week. 235,000 people, that's quite a lot, okay? We will also get Fed Mausoleum that will speak, couple different bond auctions, including a 30-year bond auction at 1 p.m. That's important, obviously, with the big, beautiful bill. Do people continue to buy government debt? If they don't, if there's less activity on that auction, long duration yields are going to go up. That's not great, which theoretically that should happen with a weaker government balance sheet. You, in theory, should get paid more yield because the government is in a riskier position. Yield is always derived from risk. So if you ever see a company that pays a 2% dividend, it's probably not risky at all as far as stocks can be, okay? If you see a company that pays a 10% dividend, it's risky. Like, you don't even have to know anything about the company unless you're in a full-on market crash and nobody wants to own anything. 10%, 6% yielding dividend stock and higher, you're taking on, to some degree, a little bit more risk. So don't be surprised if yields do come in a little bit higher. Fed Waller speaks tomorrow. We know he is the dove at 1:15, and Fed Daily speaks at 2:30. She is not a dove. So yeah, gonna be some weird headlines coming out late afternoon tomorrow. Now take a listen to this clip from Mike Wilson. He says a weaker dollar is an underappreciated tailwind for stocks, which tailwind means helps markets go higher, helps stocks go higher.
At Morgan Stanley. And Mike, actually, this was something Dan Niles brought up last hour too, vis-a-vis Apple, which has been lagging. You would think like a 10-ish% drop in the dollar during the quarter should help its results, but obviously AI is a bigger question mark.
Yeah, I think for the multinationals, there's no doubt that a weaker dollar, I think, is part of the story for why revision factors have continued to move even faster recovery than we had expected. It's actually as powerful as we saw coming out of COVID, which is hard to believe.
Wow.
And part of that is the tailwind from that weaker dollar. So there's a lot of tailwinds, Kelly. I mean, obviously while the tariff situation is not resolved, it's nothing like it was 2-3 months ago. And the numbers did come down in anticipation of those tariffs, and so now it's almost a reflexive move from just the revisions having been so pessimistic, and now we have these other tailwinds. The dollar being one, I think less bad tariffs is the way I would kind of condition it, and then of course the other drivers that we're seeing now with AI picking up, the tax bill going through, et cetera.
Right. I mean, the strange thing about kind of the way the dollar plays into earnings and all of that is that we can all see it. We all know the level on every given day. It shouldn't be much of a surprise. You should be able to factor it into your models and all of that. And yet people seem surprised. We had a similar period last year where must have been a period of dollar weakness or something where it all of a sudden came, or maybe it's the opposite, dollar strength came up a lot in calls, and a lot of the stocks moved 4 or 5% on it. So obviously it's not fully priced in.
That's right. And I mean, at some point it does get fully priced in. And oh, by the way, we can't rule out that the dollar will have some strength at some point. In fact, technically, it looks like it may be making a bottom in the very short term. So yeah, it's an ever evolving situation. I think the one that doesn't get talked about much here more recently is just the precipitous fall in oil prices. And we know that oil prices now are down about 16 to 20% on a year-over-year basis, but gasoline prices are only down about 8 to 10%. So that's a new tailwind. I think they could offset some of the tariff risk for the consumer going into the third quarter, because quite frankly, the tariff risk is larger for the third quarter from an earnings standpoint, because this is where you'll see it start to hit the cost of goods sold, which they were able to avoid in Q1 and Q2 because they were selling cheaper inventory in those two quarters. But I think that weaker oil price is going to be a good offset for the consumer in that regard.
Mike, I want to get your perspective on NVIDIA, not the company itself necessarily so much as what it represents when huge, well-known companies hit these milestones. I remember when Apple first hit $1 trillion in market cap, a lot of people were saying, oh, law of large numbers, what got them to 1 trillion won't get them to 2 trillion. They're going to have to come up with something beyond the iPhone that's just as big. They didn't. And also, very often, the leverage that these companies get, not in the debt sense, but in the operating power sense, over platforms, the sorts of M&A that they can do, products that they can create, might power them to the next level. So should investors be concerned about NVIDIA or companies like it hitting this kind of milestone, the idea that maybe they've peaked?
Well, not in the short term. I mean, John, you're exactly right. I mean, the law of large numbers would argue that you can't grow as fast when you're bigger, and that rule holds, okay? But as we've seen in the last 10 years, these mega cap companies have kind of defied that logic. But there's good reason for it. I mean, many of these businesses are monopolies. You know, they have great margin structures, and as they get bigger, to your point, they become even more powerful. So I think the biggest risk is not the law of large numbers, but can they kind of maintain these monopolistic type powers in their business models, and that remains to be seen. Some of them will, some of them won't. One thing we do know from cycle to cycle is not all of them make it to the next cycle, and I think that's the job of as an investor, is figuring out which ones can continue to grow at a pace that justify it, and which ones will inevitably not grow fast enough to justify these big market caps.
Mike, outside of lower rates, which I know a lot of people are wishing for, hoping for, maybe for Christmas, what's it going to take to get the smaller caps, SMID caps, also unstuck here?
Yeah, no, I mean, rates is the primary driver in our view. I mean, that has been our view. It's why we've remained underweight small caps for multiple years here, as the Fed was raising rates and they haven't really cut as much as people were hoping. But it's not just that. It's also, think about this, right? So the president came in this year. They sort of kitchen sink the first quarter, kind of like a new CEO would. They're trying to liberate the private economy, shrink the government. Some of those things have worked. Some of those things are still a work in process. But I think that's the true story now for, I would say, the small caps and also the S&P 493 or the S&P equal weight. Can we get the private economy growing faster now and shrink the size of the government and remove this crowding out feature? I think that's the story for 2026. And AI productivity is going to be a big part of that. Can we get AI diffused into the broader economy? That to me is going to be probably the most important thing to get right, timing wise, and also does it actually work? Because that will actually electrify this smaller part of the S&P and also the average company that has really been underperforming now for several years.
Is that the gamble of the president and this Republican Congress's bill that they have passed into law, tax and spending, that this ignites a level of growth that makes all these concerns about the deficits and the impact on the bond market and all of that makes it go away?
That's part of it. It has to be, growth has to be part of the story for us to get out of this, debt burden that we've created over really 30 years. Okay. It can't just be about reflating. It can't be about printing money. We have to get the private economy growing faster. We have to get productivity higher. There are solutions on the table. We see them kind of coming together. And look, nobody can forecast the future, but the fact that the market trades as well as it does, I think the stock market is telling us something about this. The stock market is kind of believing that the probability of that occurring is maybe greater than a lot of the skeptics have been saying.
I actually think that was one of the best interviews from Mike Wilson that we have ever heard before, so I'm glad I could share that with you. Ladies and gentlemen, that is going to do it for this video. Hit that like button and subscribe to the channel. This freaking cat just jumps and claws my leg to try to climb me. Bad little gate. Nonetheless, forgot where I was at. Hit the like button, subscribe to the channel if you have not done so already. Check out that link down below in the description of this video. You guys have a great rest of your day, and I will see you in the next one.